The president just signed the one big beautiful bill into law, and the financial ripple effects. They're coming for your wallet. Some Americans just scored big tax wins. Others, they're about to feel the sting. Today, I'm breaking down the real winners and losers with no political spin. If you earn a paycheck, own a home, or run a business, this affects you. Let's get after it. What is the one big beautiful bill signed on July 4, 2025? This bill, my friend, is the biggest tax law overhaul since the Trump tax cuts in 2017. It makes those Trump-era tax brackets permanent and brings in new deductions and credits and benefits. This is not just about the rich. It affects everyday taxpayers like you. Let's talk about the winners. High income earners. Their top rate stays at 37%. Business owners, the QBI deduction is now permanent. Real estate investors, they get back 100% bonus depreciation. Seniors, they get a new $6,000 deduction if they're 65 or older. Families, the child tax credit goes up to $2,500 per child through 2026. People in high tax states, the SALT deduction cap just quadrupled to $40,000, but phases out when your modified adjusted gross income hits $500K. And new this year, check it out, you can now deduct up to $10,000, my friends, in car loan interest. If your income is under the limit and the car is built in the United States. Also waiters, bartenders, retail workers, you can now deduct up to $25,000 in overtime and tipped income. That's huge, my friends, no matter which way you look at it. Let's face it, my friends, not everyone wins. W-2 workers still can't deduct job expenses. Renters, there's still no break for you. Medicaid and SNAP recipients, more work requirements and capped budgets. If you earn more than $500K, you lose part of all the SALT deduction. And green energy credits, most of them are gone. Students with grad loans, you've got new limits as well. Now, let's dig into the new credits and deductions. Auto loan interest up to $10,000 per year for U.S. assembled vehicles. That phases out between $150K and $300K. Tipped and overtime wages up to $25,000 above the line deduction through 2028. Charitable giving, non-itemizers can deduct $150 or $300. Itemizers must clear 0.5% of their adjusted gross income before anything is deductible. How about the adoption credit? $15,950 max, and now $5,000 is refundable. Child care credit, now 50% of qualifying costs. Oh, and new Trump accounts, $1,000 at birth, $5,000 per year can be tax deferred for education, for a home, for a job. I mean, when you think about it, that is really amazing. Now, what if the bill had failed? Your taxes would have gone up. The QBI deduction would be gone. The child tax credit would have dropped, and bonus depreciation would literally be toast. This bill may not be perfect, but without it, my friends, we'd all be paying more. Here's what you need to do right now. Check your W-4 withholdings. Max out your SALT deduction and see if you qualify. Log your overtime and your tip income. Track your loan expense when it comes to your automobile. Business owners, update your business structure. Seniors, claim that $6,000 deduction. Parents, don't forget those Trump accounts. So great. The one big beautiful bill, it's now law. Whether it saves you money or costs you more depends on what you do next, my friends. Now that you know better, you absolutely have to do better. Make sure you like, make sure you comment Big Beautiful Bill and let me know your thoughts. But regardless of what you do, make sure you don't wait to take action because it will cost you money.